everyone. Thank you for joining us today. So let's begin our session with a wonderful quote. Venture capital is about capturing the value between the startup phase and the public company phase. So for starting a new chapter of learning, I, Divya Jain, being your host for today's event, wants to extend a warm greetings and good evening to all of you present here. I hope you all are doing amazing. On behalf of the whole SEMS family, I welcome everyone to today's session on startup funding from Bootstrap to venture capital. We are thrilled to have you here as we embark on an exciting journey into the world of entrepreneurship and financing. Whether you are a seasoned entrepreneur seeking to expand your knowledge or a building innovator with a brilliant idea, this session will be your guide through the different stages of funding your startup. And to add our guest of honor and today's speaker, Mr. Jonathan Narco Latte. It is a great honor to have you with us, sir. We are very grateful for your presence. Now, let me introduce our today's speaker to you all. He is an entrepreneur from Ghana whose passion for entrepreneurship and business innovation has been driving force behind successful ventures. With a remarkable track record of founding and managing businesses and currently pursuing an MBA with a specialization in investment management. With over 5 years of practical experience, he has done an exceptional aptitude for identifying unique opportunities and turning them into flourishing enterprises. So now over to you, sir. You may start your.
Namaste, everybody, and good morning, good afternoon, wherever you are joining us from. It's an amazing time and amazing opportunity to share with you my thoughts on startup funding, especially when it comes to bootstrapping and venture capital. My name is Jonathan Latte, like she has already said, and as a budding entrepreneur, I always find it humbling and great joy to share with you my thoughts. And so today, ours is going to be a discussion. I'm from an education background, and so I always want to hear my people whenever we are having a presentation like this. And so I went to it that we all pay attention and just share thoughts. I believe in sharing thoughts, we find a common part. And so when we talk about business and bootstrapping, then the name sounds so big, a term. But then I realized that it's not anything so big. It's you get from the name, you realize that it's just a minute. You realize that it's just you having your boot, the straps on your boot, just helping yourself out to wear your boot by using the straps on our boots. And our boots are very common. And so relating it to business, I wondered why it found its way into business. But it's a nice term to use in business, because if you look at the ordinary meaning of the word, you realize that it's all about helping yourself out. And once we find ourselves in businesses, we've always tend to help ourselves out. And so it's not strange that we find this bootstrap, this word in business. Okay, moving forward, what is bootstrap? According to the Small Business Administration of the United States, a startup, we want to talk about a startup first. A startup is a business, a young company that is often founded by entrepreneurs to develop and offer a new product or service. And so we've heard about startups. Everywhere you go in my country, there's a current agenda to put a lot of entrepreneurs outside, because we believe that in starting up our own businesses, we'll be able to reduce unemployment. And my recent stay in India also suggests there's a huge policy about make in India, where is to make sure goods are being produced in India. There's a boost in entrepreneurial activities. The government is seeking to spur people on to start their own initiatives, to start their own businesses. In fact, it seems to be everywhere you go, both developing and developed countries alike are trying to encourage people to set up their own businesses. And so the term startup is not new to us. But from this definition from Professor Steve Blank, a notable entrepreneur, he defines a startup as a temporary organization in search of scalable, repeatable, and profitable business model. And so you realize that in his work, he would want to see a startup business. He defines a startup business as a business that looks forward into scaling into a bigger one or into a bigger profitable business. Okay. We have Eric also defining a startup. We have Global Entrepreneurship Monitor. It's a huge credible online platform. And in one of the annual research projects, they examined entrepreneurial activity worldwide. According to them, a startup business is one that has been operating for less than 42 months and has high growth potential and job creation potential. And so, without boring our ears with the definition of startups and all the ones given by Harvard and other credible sources, we realize that startups are basically new businesses or new companies that are less than a year or two. And these businesses have what? Growth potential, and they have the potential to expand and become big. Let's look at some of the characteristics of a startup. And so they have an innovative product or a service. Many a time we think we ought to invent something, but then you realize that most of our businesses are just innovations. And so there's already something there, and you innovate to bring something additional to what is already there. And so startups are usually have an innovative product or a service. So they introduce a new innovative product into the market. They aim to address specific problems or needs with their unique offerings. One other characteristic of startup is that they are usually at their early stage. In fact, this is the definition we gave when explaining startup. It's definitely a business in its early stages of development. Then they have high growth potential. Any startup, you agree with me, has a high growth potential in the sense that they are always looking for ways to make sure they flourish. Then they have limited resources. You know, when you are starting a business, a startup, a business that is in 1 year or 2 years, compared to a business that has established itself for 5 to 6 years, they are definitely going to have limited resources. Definitely. You know, when we grow, we tend to enjoy economies of scale. And so every startup, every business in a startup foundation tend to have limited resources, okay, and risky and uncertain. In fact, when I was beginning most of my businesses, I realized that you just don't know whether what you are bringing out is going to give you the needed income, is going to offer the needed benefit to your people, is going to offer the needed value to your people. And so these are some of the characteristics of startups. Now we come to the funding sources of startups or the funding stages. You know, with every business, there are several sources of funds. We have the bootstrap, that is a self-funding. Like I said, the word is from you helping yourself with the strap of your boot. And so bootstrap in terms of business funding is the same as self-funding. Then we have funding from family and friends, we have seed funding, we have venture capital, then we have initial public offering. And so these are all, and there are several other, in fact, there are several other sources we could make mention of, but these are the main or the popular ones that are being employed in today's business world. So the term bootstrap has an interesting etymology, and so we look at where the term comes from. In the 19th century, it originates from the phrase to pull oneself over a fence by one's bootstrap, okay? And so you are pulling yourself over a fence by your own bootstrap. And it first appeared in the English language in the mid-1800s. And so it has a long history. In the business world, the term bootstrap is used in the mid-20th century in relation to startups that are self-funded. And so when we have any business starting, a business that is less than a year or two, that is being self-funded, we could refer to its funding source as a bootstrap because they are helping themselves with their own resources. They are not going outside anywhere to look for resources. And I believe this is one of the commonest way of starting a business everywhere I've gone. In most African countries, even in India, in most even developed countries, once you want to create value, you need to do what? You need to show people you believe in what you are bringing out. And so usually you have to start with your own capital. And so it's not out of place that bootstrap is the first on our agenda. And it's a very common way that once you want to bring a value to something out there, you need to assure us that you believe in what you are bringing out there. And so you need to start with your own money. In the context of startup funding, bootstrap refers to the practice of starting and growing a business using the founder's personal resources or the company's initial revenues without relying on external funding from investors, loans, or venture capital. Essentially, the founders pull themselves up by their bootstrap. So like I said, you pull yourself up. And so when you bring that term to business, it means you pulling your resources together as founders or as a founder to start your own business. So when you talk about resources, I believe right from the definition, a lot of companies come to mind. We've had people who started businesses in their garages. And so the resource they had at their disposal then was their garage, the space, the tables, and whatever little amount they had to invest in. So entrepreneurs choose to bootstrap their ventures, often do not do so to maintain full control. In fact, it is once you put your resources in an activity or in a venture, that's when you have full control over it. In fact, the good book says where your resources are, that's where your heart is. And so it goes to say that wherever you have your monies or you've invested your resources, you have definitely control over what it's going to do. And so once you choose to fund your business by bootstrap, then you have more control over your enterprise or over your startup. Let's refresh our memories with some of the companies that started with bootstrap funding. And so in India, we have Zoho Corporation, founded by Sridhar Vembu. If I forgive me if I'm not able to pronounce the name right. But then he started as a bootstrap company offering online office suite application. It has since grown into a global software as a service company, providing a wide range of service. In fact, there are several other companies that started with their own funding. And so Zoho is one of them. The Zoho. Then we have Flipkart, our popular Flipkart. In fact, when I was in India, I was buying most of my stuff from Flipkart. And so it's not surprising that they find themselves in my presentation. Flipkart started from Sachin Bansal and Baini Bansal in 2017 as an online bookstore. They initially funded it with their own money. And we have Tally, a popular accounting software even used in Ghana and most African countries. It's originated from India. And so it also started as a bootstrap. Their main funding was from their own founders' resources. Then we have Quick Heal Technologies, all this from India. Then we have Dell. When we go to the US, Michael Dell started his Dell Incorporation in a Scottish dorm. Okay, so it's always good to start your own business with your own resource because you have the vision. And it is believed that once you put in your resource, you're going to manage it well. It comes with a lot of advantages. And so you start with your own capital and seek to expand using the revenue you get from the business. And some bootstrap companies in Ghana, we have the Simple Dreams Center. That's my own business, Simple Dreams Enterprise. We started about 3 to 4 years ago, we turn raw nuts and so cashew, almond, peanut into nutritious honey-coated snacks. And it started with funds from its founders, and it's a growing concern for about 3 years now. Then we have Kente Master. I believe our popular Kente is not new to people in India because it's always worn in US. I believe recently, during the unfortunate demise of Black American, where the police had his knee on his neck, we realized that most of the parliamentarians in the United States had a Kente sash on their necks. And so there's a company in Ghana that produces that. A Kente Master is a Kente fashion brand that produces and sells traditional Ghanaian Kente clothing and accessories. They also started. Then we have Agro Center. We have Nokwari Technologies and several others. You agree with me that there are a lot of advantage that comes with you starting with your own business, some of which include full control. Once you start with your own resources, you have full control. You decide where and what and when to employ these resources, how fast you want to go. In fact, there's that saying that when you have your resources in your business, you don't sleep. You work more than 8 hours, more than you working for someone. Okay, you exercise full control. And you take decisions quickly. One advantage of you starting with the bootstrap is taking decisions quickly. You don't have to call for shareholders meeting. You don't have to decide. In fact, you decide with figures. You make your own analysis and you take decisions. You don't consult with anybody at all. And so it has the advantage of easy or faster decision making. No equity dilution. So it allows founders to avoid diluting their ownership in the company. By retaining a higher percentage of equity, they can enjoy a larger share of future profit and potential exit returns. And so once you started with your own, once you are having profit, you are bearing your own profit. It's very popular in Ghana. In fact, we have so many businesses in Ghana. We started as Bootstrap, and so they are enjoying huge profits alone. And once you're enjoying huge profit, you agree with me that one demerit or disadvantage will be enjoying the risk also, okay, or the losses alone. Okay. It's a proof of concept. Once you invest your own resources into something, it tells you that you indeed agree with the concept, or you indeed accept the concept. Okay, once you are putting your own money, so you have an idea, you have a vision, and you don't have any resources in there. How do you convince me? How do you convince an external partner to invest in your startup or in your concept? And so you investing, you bootstrapping your own business means that you are what? You are confident in the concept you are bringing out. Okay, you are confident of the revenue potential of your business. Okay? And it also ensures financial discipline. Self-funding encourages financial discipline and frugality. You don't waste resources, because all these monies are coming from you. All these resources are from you. And so there's that tendency to be frugal. Frugal means you live within your means. You don't become extravagant. You make sure you are self-disciplined financially. So entrepreneurs are more likely to be prudent with spending and resource allocation, which can lead to efficient operation. Those are some of the advantages of Bootstrap. Then we look at some of the disadvantages. You agree with me that if you want to start a business, one challenge I encountered when starting my simple dreams was the issue about the capital. Sometimes you think when you start on a higher skill, you'll be able to provide your offering at a very marketable cost, and you don't have the resource, you don't have the capital, especially. And so starting as a bootstrap has a disadvantage or a demerit of a limited capital. It provides limited capital compared to external funding sources like venture capital. And so compared to sources like a venture capital, bootstrapping will always provide lesser funding, and it may restrict. Mind you, there are people who started as bootstrap and they are now expanding and looking at other funding sources. And so we are not saying bootstrap isn't the good, but then these are some of the disadvantages or the challenges that may come your way. Then we have slow growth. Imagine you are starting your business with limited resources and you are depending on the revenues to expand. Definitely, it's going to take a while for you to expand. Unlike someone who has initial public offering, venture capital, several other external sources, definitely they were going to expand quickly more than you. And so there's that slow growth pattern in a bootstrapping kind of company or business. The risks of failure. Bootstrap startups are often more vulnerable to financial challenges or unforeseen circumstances. And so in Ghana, for instance, during the COVID, we have a lot of medium to small scale enterprises collapsing because they started with their own funds and now businesses had to shut down, COVID restrictions. And so most businesses, and I believe it wasn't new to only Ghana, India also had most of their restrictions. And so realize that most businesses who were self-funded, because of these unforeseen circumstances, they had to shut down. Most of them have not recovered since. Then there's that competitive disadvantage. When I started, I said when you enjoy economies of scale, realize that you're able to produce at the least cost, and so you charge at the least price. Now you are starting with limited capital. How are you going to charge that least price? Mind you, there are people who are starting with huge capital because of external support. And so they charge the lesser price and you may be priced out of the market. And so competitively, you may be lacking. Okay, then resource constraint. We've already talked about it. And so when you start with your own resources, basically your resources are limited or they are small. And so it's difficult having a huge resource base. Now we go to, so you realize that in a bootstrap, you need to start with your own resources. And there lies the case of how to even make up this resource. How do we gather funds? How do we create the necessary connection to be able to start businesses with their own funds? Let's look at venture capital, after which we look at a critical aspect of our lives, which I think when we put in place can help us get the needed funds we need to start up our own businesses. So for venture capital, typically venture capital as a startup which has innovative ideas that have a potential for rapid economic growth and high returns. And so the funding is usually provided during the seed stage. And so we have several types of venture capital. You realize that there are people who want to invest and own some parts of your business idea or of your business setup. And so they'll put in their resources or they give you part of it to own a part. And so they provide startups and early stage company with innovative ideas or disruptive technologies that have the potential for rapid growth and high return. The funding is usually provided during the seed capital, during the seed stage, and subsequently founded around. Venture capitalists evaluate the business idea, market potential, team expertise, and scalability before deciding to invest. Venture capitalists are investors who provide capital in exchange for ownership, equity, or debt in the company. And so realize that this is very common in India and in fact most countries. So unlike the bootstrap where you start with your own fund, you can go for venture capital. We have people who have that resource, that capital, and they tend to exchange it for ownership, a part ownership in your venture. You agree with me that this also comes with a lot of advantages because there's a proverb in our dialect in the Ghanaian parlance that when you take a broom, the broom that we use to sweep, when you take one stick out, it easily breaks, but the whole bunch is difficult to break the whole bunch. And so when you pull resources together, you get a lot of resources, and it will be difficult for it to collapse or for it to go bad when invested in the right venture. And so some of the advantages is that it has substantial capital injection. And so if you are funding your business by venture capital, you look for people who have the resources, who buy your ideas, who can evaluate your ideas and invest in it. One advantage is that you're going to have substantial capital to inject. You have strategic guidance and expertise. People put in resources, but mind you, they will have to evaluate your concept, your ideas, and these people have expertise. And so once you want to source for their funds, you have the advantage of having a guide of an expert. And so you realize that unlike a bootstrap where you are using your own resources, with a venture capital, you are sourcing the resource outside, externally, and aside you having the capital, you even stand a chance of getting what? An expertise. So Sonny Tiku, I realize that I've just answered your question. One clear advantage that this difference is that with bootstrap, you are starting with your own capital. With venture capital, you are going for external funding. Aside you having the external funds, you are also getting what? External expertise and guidance. Sometimes when you are treading a path, when you are treading a path, you wouldn't know that your back is crooked. There's another wise saying in our dialect that the one who is causing to tread a path, who is treading a path, doesn't know that his back is treading a crooked path. And so it takes someone behind him to tell him that, oh, where you are treading is not straight, it's crooked. And so you have the advantage of having the guidance and expertise and extra expertise from external sources. Then validation and credibility. For someone to invest in your business, it goes to say that your idea is very credible. You see someone has his audio on, it's giving feedback. Can we check? So we have validation and credibility. Once people are accepting to invest in your business, it gives some credibility to the idea, to the value you want to bring onto the market. And then business development support. And so venture capital may offer additional support. Like I said, they offer additional expertise, support, strategic partnership, and potential customers. And so it's a very good way of securing funds. Then fast market penetration. When you start with huge capital, you have huge capital outlay. You're able to produce in huge quantities. And so you are able to penetrate the market easily and faster. And so you have easy and faster market penetration. Then some of the disadvantage. To every advantage, there's definitely going to be a disadvantage. So you realize that equity dilution, for you to go for venture capital, then definitely it means someone is putting in his resources, capital. And so the ownership becomes diluted. It can't be yours alone because I'm putting in resource. I need to have a say in what you are doing. And so there's equity dilution. There's high expectation and pressure. In fact, for all of us who have joined today, if you should invest in my business, you will definitely be wanting my business to grow. You'll be having high expectation and you wouldn't take it lightly on me at all in some management decision. And so there's that pressure that comes with you going for venture capital. You need to work to prove your worth, to prove that you are giving your people value. Okay, and there's loss of autonomy, like I've said. And there's intense scrutiny and due diligence. In fact, should you all contribute towards a business, you will always be looking at their financials to make sure that they are spending your resources efficiently. And so there's that intense scrutiny. That's why most businesses would have to publish their financial statement and so forth. Yes, so there's definitely a venture capitalist, a bootstrap can definitely go to a venture capitalist with time. Because one of the disadvantage we looked at with a bootstrap is that there's a slow growth, but the advantage of a venture capital is that you have huge resources to start quickly, and so growth pace is faster than that of what a bootstrap. And so you can start as a bootstrap and veer off into what venture capitalism, and so you can get other investors to come in, and so it becomes a venture capital source of funding. So the exit expectation is also venture capital typically expect an exit within a few years, either through an equity offering, and when you have a long-term vision for the business, you should also take this point into consideration when going for venture capital. One thing I want us to have in mind is that as a businessman, there would or someone who has a business idea, good business idea, there are several sources of funding we could explore. But when whichever source you explore, usually we encourage people to start with their own business. Once you put in your own resources, it gives a lot of credibility. It tells people that you believe in what you are bringing out. And once you go to venture capital too, there's an opportunity of you are starting big and growing faster. Because all these companies that we listed, most of them started as bootstrap, but later on went to venture capitalism, went to initial public offering, and all these other external source of funds that we know. In fact, most of them started as bootstrap. Our popular Microsoft story is so clear. If it's Facebook, he said he started with friends with his own resources, and with time he had to go out to the public to source of funds. And so a lot of big companies started, but later on end up with external sources of funding, be it venture capitalists, be it other sources we've not looked at today. So bringing our main point, our presentation to a close for me to listen to you, we realize that bootstrap remain a vibrant. It remain a vibrant source of capital for startup and will therefore require efficient management. Every effort, you need to put in much effort to mitigate the challenge that comes with it. And so there are definitely challenges with whichever source of fund you want to have for your startup, but you need to be very aware of the challenges so that you summon them as they crop up. And so with my own experiences, you have challenge with capital, like I've already stated. You have challenge with marketing. Sometimes with staff, sometimes you have to put in your own strength. You can't hire a lot of people. And so all these are challenges that comes with bootstrap. But then it helps because your decision goes quickly. Sometimes you even get yourself involved in sending out the product, in marketing the product. And so most often than not, you realize that bootstrap becomes the ideal type of funding for a startup. Then we have venture capital, also provide a massive startup capital layout and very popular in the era of this economic slowdown. And so you realize that in this era of economic slowdown, we have people who are now going into venture capital because people are not earning much. People are not able to gather enough resources to be able to start their own businesses. And so they will definitely go for bootstrapping. And once they go for venture capital, they have this huge capital layout and they're able to start their businesses big. In fact, one thing I want us to have in our minds is that whichever source, we need to have a strong network of people, because it is only when we have a strong network of people that we'll be able to share our ideas. We'll be able to get in touch with people who can provide us external funding. We'll be able to get in touch with people who can even help us to raise funding ourselves. We've talked about bootstrapping as you starting a business with your own fund, but how do you do it? There are several ways of making funds your own self, some from the popular savings and some from several other. In fact, in Ghana, there is this popular money saving system that helps people to raise a lot. And so we have about 5 people, committed people who tend to share their monies round. And so let's say they have 1,000 rupees each. This month, each person decide to bring out 1,000 cedis. And so they have 5,000 cedis in all. They give it to one person, 5,000 rupees in all. They give it to one person. The next month, they all contribute again, 1,000 each. They give it to the other person. The third month, it goes on and goes on. And so these monies become a little bit huge. Unlike you started with 1,000, where you might not get, that might be very small. This kind of systems are coming up for you to raise money yourself without recourse to banks. Because most banks would have what? Huge interest. And so people don't usually want to go to their end as a startup. So it is essential to consolidate our networks to make sure we have a strong network. So the example I just shared, if you want to raise money your own self using that format or that system of savings, it means that you will definitely need a network of good people who are what? Who share the same vision with you. You agree with me that in your cycle, you have people you invite for parties, for nightclubs, you have people you discuss your business ideas with. And it's extremely important you choose people carefully, because these same people are going to be your strong network that is some are going to lead you to venture capitalists when you need people, when you need money to start your business. Some of your friends, your network of people might send you to people who will be able to fund you. Some of your network of people assist you to strengthen up your resources, to shore up your resources yourself without recourse to the bank, you see. And so we should always have a strong network of people and connection. It shouldn't be always in our sphere of academics or knowledge. It shouldn't be that because you're a manager, you can always have friends who are also managers. It could be in other professions. It could be in whichever, because there are doctors who are willing to invest in businesses. There are lawyers. There are several other professions who are also willing to invest in business ideas. And so once you have these wonderful, innovative ideas, why don't you create a strong network now, so that when you are ready to implement them, these people become a strong foundation on which you get your resources. I would like to end here, and if there's any other question, and encourage all of us, in fact, as wherever we find ourselves, for us to succeed in whichever business whichever funding source we want to employ, we definitely have to have a strong network of people. We definitely have to invest in our businesses first, so as to give confidence to those people who would want them to also invest in us. I believe these three things, when we have it at the back of our minds, whenever we are starting our own business, we are going to have a great success. So I'll always be around and be ready to share with you. That's it. Thank you very much for listening.
Wow, what a wonderful knowledge given by you, sir. I hope our audience learned many new things from this session. I would like to highlight some of the points, like as we navigate this transition from bootstrap to venture capital, keep in mind that each funding stage brings its own set of challenges and opportunities. It's crucial to stay adaptable and be prepared to pivot your strategy along the way. It was very effective for our audience. Again, thank you for joining us and sharing your experience, your precious time and knowledge with us. Sir, there are few questions which our audience wants to get answered. So with your permission, shall we start?
Yes, we can start.
Okay, sir. So my first question would be, what is the difference between bootstrap and venture capitalist?
Okay, so what we've just said, you realize that bootstrap is starting your own funds. And so you starting a business with your own funds, your own personal funds going into a business is bootstrapping. And venture capitalist is external fund. It could be from an external individual, for an external company, for an external who want to give you capital in exchange for ownership, a part ownership of your business. So that is the main difference with that. And they all, like you rightly said, they all come with their own advantages and disadvantages. Let's bear that in mind. Any other question?
Yes, sir. So my second question would be, what role does a well-defined business plan and financial projection play in convincing investors to invest in a startup?
A role of a good financial plan and business position. Again, the first one is what?
Yes, sir. Let me repeat my question, sir. What role does a well-defined business plan and financial projection play in convincing investors to invest in a startup?
Okay, in fact, I just can't emphasize that enough. it plays a very critical role. You would agree with me that you need for you to implement something, you need a plan. You are investing your own personal savings into something you have not planned. And so a business plan is putting the idea onto paper, onto workable actions. And so you have an idea, you've thought about something creative, you have an innovative idea, you have a value you want to send out to the public. It's in the head. Let's put it on paper. How do I send it? Or how much do I put? What value do I put on this? You know, that's basically a business plan. And so a good business plan is very important in whichever type of funding you want to start with. Be it venture capital. If you want to convince Divya, Jane, I want to convince you to be my venture capitalist, and I just say it by word of mouth, and I don't have any strategic plan to show you, definitely you will not buy into it. You definitely want to have a plan. And so these are very critical, and they are people. And so you realize that people are now assisting people with business plan drawings. It is very, very, very important. I just can't emphasize that enough. Businessmen who want to invest huge amounts of money into your business would want to see your business potential. Once your business is growing, they want to see the earnings, your projections, everything. They want to know everything before they put in money there. And so in as much as you would write down these business plans and everything, you should be able to communicate to them too. So communication is important too, as well. Okay, and so these two are very, very a good business plan and a good financial projection statement is very critical in securing funds from outside, even for your own self. If the funds is coming from your own self, if you have a good financial projection, it's going to help you. It's going to guide you as to how to move about your business growth.
So my last question will be, where one should invite venture capital?
Again, please repeat your question.
So my last question, where one should invite venture capital?
Okay, when should one invite venture capital, right?
Yes.
Okay, and so this is a very subjective question. You realize that one of the disadvantage of venture capital is that you are going to have advantage of venture capital is that you have a huge capital outlay. So you have a substantial capital injection. So when you are starting as a bootstrap, you realize that you've gotten to a stage. For instance, in my business, you realize that there's a huge market demand for my product. Meanwhile, my staff strength and my resources in producing is very limited. Should I get these resources on board to expand my business, I'll be able to meet that market demand. That's when, and so at every business stage, or all these businesses we've cited, most of them went for external fund, and when they realized that there's a huge market potential, and so they needed external resources or an additional resources. And so when do you go for venture capital or external source of fund will be subjective. And that's when you have a good business plan, it could help you because you would have drawn all these plans down, all these projections down. And so you compare what is happening actually on the field to the projections you drew down, so that when you get to a point where you envisage to go for external fund, you can just implement that. And so it's very, very subjective. If the business requires that, if there's huge market, if you got into a point in your business where you realize that you need an external huge capital support, why don't you go straight that way? Mind you, this funds is going to help you grow to meet the market. And so in my business, for instance, I definitely would very soon go for venture capital or any other external source of fund, because you realize that the demand is there, but your resources in providing that value is limited. And that's when venture capital come in. I believe I've answered the question.
Yes, sir. Sir, we got one more question. Is venture capitalist is a good option in short run or long run?
Okay. So venture capital, is it a good source for a long or short? Well, it depends. When I was studying business, in fact, I've taught business. Usually we say short term is just 1 year. So what about 2 years? 2 years could also be a short term, 3 years could be a short term. But it depends on the business. When you need the exigencies, when the exigencies of the business require that you need a huge capital outlay, you don't delay it. You are providing value to people. People are now demanding more. You have limited resources because it's from your own resources. Why don't you go for the external thing and demand increase what? Increase to be able to meet their demand. Expand quickly, grow quickly, meet their demand. You still have your value worth. Mind you, these venture capitalists are not going to take absolute control over your business. They are giving you capital and you decide, you negotiate with them as the part of your ownership that you are going to take out. And so it's good. It could be good for short term. It could be good for long term, depending on the nature of business. So there's this business, there's this paste. There's this product I bought in India. They have, it's a ginger garlic mix, for instance. I thought of starting in Ghana, but I realized that for you to start something in Ghana, that's business in Ghana, you need huge capital. Where am I going to get this huge capital in terms of machinery? I'll definitely have to import from what? India. I'll definitely have to get huge, and I'll definitely have to start on a huge capital budget. In such instances, the product line I want to bring out require huge investment, and I look at my resources and I don't have. So I can't start as a bootstrap. I right away would go for what? Venture capital or other source. Do you get me? And so it depends on the business idea you are bringing up and the exigencies. It could be good for a short term and it could be good for a long term. Thank you very much.
Thank you, sir, for answering these questions. So before moving forward, I stop sharing the screen.
Hello.
Yeah, hello.
I want to ask one question, please.
Okay, please go ahead.
We have got in India so many Vande Bharat trains are coming. Whether the external investment is desired or government should invest their own funds.
Okay, so whether we should have external investment or government-owned funds, right?
Yeah.
Is that a question?
Yes.
Okay.
Yes.
Thank you very much for the question. It's very important. In fact, I'm in India. I just left there just last week, and so I know a little bit of what is happening in India. And I like the idea of making India. It is the same as what is happening in Ghana. We're also promoting Ghanaian goods, establishment of what industries in Ghana. One thing we have to bear in mind that if you don't have resources and someone has the resources to make your vision come true, I think it's not a bad idea at all. And so be it external funding or internal funding, you look at the pros and cons. So for instance, India, when I was there, I realized that the interest rate is 10%. That's what I heard. 8 to 10%. But in Ghana, interest rate is what? 31, above 30%. So ordinarily, someone in Ghana wouldn't go for investment from banks, but may go for external, because external, sometimes their interest rates are even lower. And so in the issue of India, you would have to look at the pros and cons. These external venture capitalists or external, what are their the interests, or what are the conditions? Yes, what are the conditions attached to their investment compared to what government is doing? Because I learned government is also providing a lot of subsidies for startups. And so when you compare both, then you take a good decision. I would always want to go with the government because everything lies with the government. And so scrutinize what the government can do for you first. With the government can never die. So I would prefer you look at what government offers first, and if it's not something that is going to help you, then you look for the external funding as well, because government has a lot of power when it comes to providing subsidies and assisting businesses. One of the major way of stimulating economic growth is increasing government expenditure or government purchases, and they do that through all these subsidies and all these stuff. And so when they wield this enormous power, it's good to always be on their side and capitalize on whatever thing that they provide. And so, for instance, in Ghana, our government is also providing capital to new startups and even businesses that also require huge investments. Government is giving them capital, and I believe it's the best, other than the external ones. Okay. So I believe I've answered your question, sir.
Thank you. Thank you, sir. Thank you.
You're most welcome, sir.
Okay.
So thank you, sir, for being there with us. Again, thank you all for attending today's webinar. And if you have any additional questions, you can contact us by email or telephone. We are happy to provide you additional support to you. Please follow us on our social media and subscribe our YouTube channel for new learnings. So stay connected to us for new learnings. I, Divya Jain, being your host for the day, signing off. Have a wonderful day. Thank you everyone for joining us. And thank you so much, sir.
Thank you. Announcing my name, Ghanshyam Das Garg. Thank you.
Thank you so much. I believe we all start up our business. Okay, the next meeting, we should all be businessmen and women. Okay, take care. See you again.